But I'm good, I promise. I'm not being held hostage. Unless we have another big, massive sale where I see a lot of opportunity. I don't think I'm gonna be buying any more Tesla, but I don't know, I can't really help myself. It's almost like a disease at this point. What's up guys, it's Mrs. Invest. If you're new to my channel, welcome. I talk about everything related to investing for financial independence. And today I thought I'd make a little bit more of a personal video talking about my investing plans for 2021. With everything that's happened, it's going to be a different strategy than usual. And there's really two reasons why I'm making this video. Number one, I love hearing about other people's plans for investing, and really it's only fair that I share myself. And number two, maybe to give you guys some ideas and strategies when it comes to investing that you may not have thought of before. With the holiday season just ending, we've all spent a ton of money, and it's a good time to reset and remind ourselves that it's so much better to have our money working for us rather than us working for our money. So quickly, let me just summarize where we are right now, early in 2021. We've had the biggest bull market in history over the last 10 years. We were really due for a correction, and the microscopic invader gave us a perfect opportunity to correct, and boy did we correct. It was a crash. Let's just call it a crash. There was mass panic. Everybody was taking their money out of the stock market. Family, friends told their family and friends that they had pulled their money out of the stock market. And so their family and their friends pulled their money out of the stock market. And down we went in the downward spiral. We got to a point where some REITs were trading below their net asset value, meaning below the value of just their property's worth and nothing else. Oil companies were looking to give away free oil. Nobody wanted to buy it. They were literally giving it away for pennies on the dollar. And there were some stocks trading at such low valuations, it was as if people believed that those companies were never going to make a dollar ever again. And now here we are in a recovery period, and we've basically all turned into hoarders. We are so afraid of spending money at this point because we don't know what's going to be happening in the next few months. Very few people are traveling. Discretionary spending has gone down almost to zero, and we are literally hoarding all of our money. And so right now, the market is basically a piano being held up by toothpicks. And so the general consensus for 2021 is the bear market is over, trouble has passed, and we are in the clear. I'm not entirely convinced about that. I hope it's true, but I'm not entirely convinced because remember, we've seen massive liquidity being injected into the markets, quantitative easing by the Feds and the Bank of Canada to prevent total market collapse. People are out of work, and when people are out of work, they don't make money, they don't spend money, which is not good for the economy or for the stock market. So with that said, we all want a safe and defensive place to put our money in 2021 that's going to help us profit and come out ahead compared to doing nothing at all or just having our money in a savings account. So first, where's my portfolio right now? Well, right now I'm about 60% in individual stocks, 20% in broad market ETFs, and 10% in cash. I know, it's not ideal. Let me tell you what happened. When March and April came and I saw so many good opportunities in different stocks, I was basically going after value and opportunities that I thought, after all the craziness went away, would have the greatest potential of recovery. At the time, I wasn't really concerned about buying a balanced portfolio or having everything allocated perfectly. I was basically going after value and opportunity where I saw it. And so although I did pretty well in 2020 overall, it's left me with a pretty risky and unbalanced portfolio, and I need to work on that. So now in 2021, I've basically left myself a risky, poorly allocated mess that I have to clean up, and this is how I'm going to do it. First, I don't intend on selling any of my stock holdings. When I bought them back in 2020 during the crash, I bought them with the intention of holding over the long term. Some of my largest holdings right now are financials, so bank stocks, REITs, a lot of which I bought in 2020, and Tesla. A much larger percentage of my overall portfolio than I would like to admit is in Tesla right now, and honestly, it keeps me up at night and I need to work on it. With that said, I am a huge believer in what they're capable of in the future. I think we're just starting on their exponential growth curve. A lot of people say, they've already peaked out. I think we're just beginning. So I am really happy holding on to the shares that I do have, but it doesn't matter how strongly you believe in a company, you can't have so much of your percentage of your net worth wrapped up into one individual company. And so rather than selling those shares to reduce my position, I'm just going to be adding to my portfolio elsewhere. So essentially it reduces my portfolio weighting in Tesla. And this really goes for any individual stock you're holding. You don't want to have your entire portfolio wrapped up in one company, because if something happens, you are pretty much screwed. I don't intend on buying any more individual stocks unless we have another big massive sale where I see a lot of opportunity. I don't think I'm going to be buying any more Tesla, but I don't know, I can't really help myself. It's almost like a disease at this point. And the second thing I'm planning on doing in 2021 that's different than usual is keeping a larger than normal emergency fund. Normally I keep about 3 months of expenses in a high interest savings account just in case. But if you watched my video, I'll link it up here about how I save 80% of my income. My monthly expenses are pretty low, so just having 3 months is not very much money. So what I'm doing to be a little bit more defensive in 2021, just in case, is I'm going to bump that up to about 5 to 6 months worth of expenses saved, just to keep a little bit more powder on the side in case of another who knows what. Honestly, at this point, nothing surprises me anymore. At first, like early 2020, I was surprised when I heard like a piece of news. Now at this point, you could tell me where a new microscopic invader has started and I'd be like, not even shocked. Okay, and my third strategy for 2021, now this is probably the most different one than usual. I talked about how I need more stability and diversity in my portfolio overall to reduce my risk. I already am invested in ETFs, about 20% of my total portfolio weighting in broad market ETFs. But this year, I think I'm gonna focus mainly on ARK Innovation ETFs. If you haven't heard of ARK Invest, their CEO is Cathie Wood. She is a boss woman. I would probably trust her to raise my firstborn child. So I think I can trust her to handle a couple of ETFs for me. She's just amazing. I love her investing philosophy. And what separates ARK Innovation ETFs from other ETFs is they pretty much invest exclusively in companies who are disruptive innovators in their field. Pretty much what a disruptive innovator is are companies that just change the game. They come in there and they do things differently, better, faster, cheaper, and they disrupt the industry that they're currently in. So if you think about it, like Apple disrupted the industry when BlackBerry was the King Kong of the phone world. Amazon came in and disrupted shipping, and Tesla is coming in and disrupting the automobile sector with electric vehicles, green energy, battery technology. So these are the types of companies that ARK is going after, but they're going after these companies in their infancy before they've really had a chance to grow exponentially. I really like this investing philosophy for 2021 because I think that when crap hits the fan, it's the companies who can innovate and do things differently, better, faster, cheaper than the other companies who are going to come out ahead. I don't really think there's a better time than now to be investing in disruptive innovators. With that said, their ETFs are actively managed, so the management fees are a little bit higher than I would typically like to pay. I think they're around 0.75%. But if you look at the returns that they've been getting in their fund over the last 5 years, they're pretty impressive. And if that trend continues, then I definitely think it's worth the 0.75%. They're definitely not safe. They're a pretty aggressive and risky ETF, but I'm young and I'm willing to accept a little bit more of that risk. And I think that these ETFs can do better than if I were to individually pick these disruptive innovator stocks myself. So that's how I kind of rationalize to myself the higher management fee, the normal that I'd like to pay. So pretty much this year, I'm going to give ARK Invest a go. I'm going to see how I make out with them, and we'll report back at the end of 2021 on how we did. By the way, sorry guys about the lighting. It's just one of those days where like the sun is coming and going behind the clouds, so it like looks really dark in here. It looks like I'm in a cave, but I'm good, I promise. I'm not being held hostage. Okay, and my fourth strategy for 2021 is real estate. Now, as of right now, I have 0% of my net worth in real estate. I don't own any properties, and honestly, I've been saying for years that I need to get into the real estate market, and it just hasn't happened because honestly, I feel like I've been spoiled with the stock market a little bit. It's just easy. Nobody calls me, nobody bothers me. I just buy my stocks, buy my ETFs, and they do their own thing. So the idea of taking on a less passive investment is not that appealing at this point, but I know just for purposes of diversification, it's probably a good idea. The other thing is 2020 house prices went insane. At least in my area, the prices went through the roof. But at the same time, people have been saying that for the last decade. Every year people say house prices are in a bubble and they're gonna pop, and then they just keep going up. So I don't know, it's probably time I get into the real estate market. I don't know if it's going to happen in 2021. It might be an end of 2021 goal for myself, maybe early 2022, but I definitely want to get my foot in the door and get started with my first property. Probably what I'll be looking to buy will be like a duplex or a property that I can live in for a few years and house hack and then move on to something else. We'll report back at the end of the year and see what happened. Okay, and the fifth thing for 2021, which I am not going to be doing, is investing in precious metals, option trading, or cryptocurrency. For me, and I feel like for most people, it's just unnecessary excess risk. I know myself and that I would lose money in these strategies because I would start to panic with the lack of control that I have over those types of investments. With my current strategy that I've used for the last decade of buying great companies at good prices and ETFs and holding for the long term, I've done really well. It's fairly predictable for me, and really to stray from that to something even riskier with really no guarantee of getting a better return, it's just personally not for me. I just find it's too much unnecessary risk, and there's too many factors that I can't control. So I have stayed out of them, and I plan to stay out of them in the future. So pretty much in summary, my investing plans for 2021 are to increase stability, increase diversification in an effort to reduce risk of my portfolio. I'm going to be doing this by investing most of my money in ETFs, specifically ARK Innovation ETFs. Forgot to film an outro, but thanks for watching. See you in the next one. Subscribe if you're new. Bye!